Hello everyone. Hope everyone is safe. So as you know that in the previous class we have discussed about the accounting, basic of the accounting. It's just an introduction why we need that subject, why we need to maintain the accounts, what is the purpose behind that, who all are the users of the basic information. So in the today's class, we will discuss about the terminologies we need to use across the accounting subject. What is asset, liability, revenue? Like how do we can interpret these terminologies that we need to use? And in the end of the class, you will find some case study that you need to solve. And in the next class, I will give you also the solutions and discuss the entire case studies. Okay. So let's start with the class today. So first is what is asset? What do you know about the asset? What all are the types of the stuff that we have we can call as a asset? So first of all, asset is something that, or we can say is it is any resource that we own. On that we have a right to use, or we can direct the usage of that resource, or that resource we can use for to generate any benefit, any revenue. For example, let's take about your daily life example. Suppose in your home, if you have AC, refrigerator, fans, washing machine, like it's your right. Nobody can use these assets or stuff without your permission. So in the similar manner in the business, and while doing the business, everyone needs some resources to conduct their daily business operations. Let's take an example, like suppose if any travel agents buy a laptop so that they can book the tickets, or they can also provide another services to their client. So it means the laptop whatever he has purchased, it is an asset for them. Why? Because the travel agent has purchased the laptop by his own money, and he has the right to use that laptop for their purpose. Nobody cannot use that laptop without his permission. So I'm repeating again, any resource which you have purchased and you have the right to use that resource we can call it as a asset. Let's take another example. A stationery shop buys a printer so that they can take a printout and photocopies for the customer. So through the printing machine, he is able to provide the services to the customer. Also, they can charge, right? They can earn the revenue. So in the similar fashion, we can say that the printing machine is also an asset for them. Hope you are able to understand. Let's talk about liability. So, what is liability? Anything or any obligation, or if suppose if you took a loan from the bank, or if you took a money from someone that you have to repay, that is a obligation, right? That is a liability for you because you owe to someone, right? So any obligation or a debt a business must pay to another party in the future, that we can so anytime whatever, if if you have anything or any resource which is not pertains to you, which is not belong to you, you have uh, borrow from someone else, or it pertains to someone else, that resource is your liability. Suppose if you want to start a business and you don't have the money, right? But to start a business you need the money. So you have two options. Either you can borrow from your friends, relative, parents, right? Or either you have to approach to the bank to for a loan. So that money is not you, is not for you, is not pertains to you, right? Any after a certain period of time you have to repay them. So that loan is your liability. And suppose if you it's like if you are running a business, you need some warehouse, you need a shop where you can set or run their operations, and you have to pay the rent to the owner, right? And you have not paid that rent yet. So that is also your liability because you have incurred some such sort of expenses, but you have not paid yet. So it is your obligation because you have taken the services but not paid. Like suppose in your daily routine, if you know purchase something for a confectionery shop and you have not paid them, so it means it's your liability to clear their bills, right? So in the similar manner, in the business, whatever you have borrowed from someone, or if you have incurred any expense which you have not paid yet, that it's your liability. Like example, overdraft facility, any bank loan, if you have issued any debentures, and any expense that you have incurred but not paid yet. Okay, let's go ahead. Equity. So it is, in the simple terms, it is nothing but it you know uh, denotes the capital invested by the owner and the shareholders, and also whatever the profit they have earned. Equity is just a total of your capital invested and the profit earned. So, and how do you compute that equity also? Like if you have asset minus liability comes your equity. I'm repeating again, asset minus liability is equal to your equity. So it means whatever you have, it pertains to the owner if they are running the business. But if they have something which pertains to another person, like liability, that they have to deduct, and rest is your equity. For example, if like you want to start a business, and for the starting the business you need some machinery, you need money to set up the workforce, right? But you don't have the money, so you have borrowed that money from the outside, so it has come under the liability. But that money you have invested in your some sort of assets, like in machinery or building. So asset minus liability comes your equity. And suppose if you have started a company in which you have issued some shares, so that also becomes a equity. It come under the equity. So under the equity, there are two components. One is share capital and second is retained earning. Hope you are able to understand. So the next one is revenue. What is revenue? It is, in the simple term, it is your income, whatever you have earned by selling or providing your services. Like whatever the money you have earned by providing the services or by the sale of goods. Suppose if you are a travel agent and you are providing that services of booking tickets online, and you have booked the ticket of some customers, so whatever you have earned through booking that ticket, it is your revenue. Suppose accounts teacher providing a teaching services to their students, right? So whatever they can charge from the students and they can earn through students, it is their income, their revenue. So here also there is one concept which is very necessary to understand, the difference between operating income and non-operating income. So under the business, we every time we have a specified business category, or we can say that the primary category of our business. So whatever we have earned through that primary category, it is treated as a operating business, and the rest income we can consider as a non-operating income. Suppose, let's take an example of the bank. So bank, but how bank earns revenue? What is their earning model? Generally, they will provide the loan to the customer or issue credit cards. So the main income for them is interest, or interest on loans, or interest on overdraft facility, interest on credit cards, right? Or either they will. So these are the three components, like that bank can earn, right? And other also, but we are just discussing about the broader categories only here. So, and so this is their operating income because it is the main business. We can say that this is the main income, like the income they're earning through their main business. But let's suppose they also enter into another business, or Suppose they're earning some commission income, like they're providing the insurance also to their customer. So on that they're earning the commission income. So that commission income, we cannot say that it is a revenue for them. It is a other income, not revenue. So the to differentiate between revenue and other income, you must know about what is, first of all you need to understand what is operating income and what is non-operating income. After that you will able to understand, right? Operating income is whatever you have earned through the main business, and the rest is your no other income, non-operating income. Okay. Next is expense. So to whatever we have incurred, how we can say that it is expense, right? Like suppose, like for asset purchase also we have to pay, right? So we cannot say that whenever we have paid something it is an asset or it is an expense, right? So f- there is only one difference that you can use to differentiate between asset or expense. First of all, on that you have the right to use, and you can use over a multiple period of time, and through that spend you will able to generate a revenue. Then we can say that is a asset. And generally asset, like for the asset we have a major categories like land and building, property, plant and machinery, any investment property or any fixed deposit, any cash balance, debtor balance. So all these are categories covered under the asset. So once you will learn about more about the accounts, you will it is very easy for you to differentiate between asset and expense. All right. But what is expense? It is a cost that we have incurred to earn revenue. So under the asset, that whatever the cost we have incurred for asset, that cost will help us to generate a revenue. Like if we have purchased a plant and machinery, that plant and machinery we can use to manufacture something, some raw materials, some finished goods that we can sell further also, right? So that we can say as a plant and machinery is an asset for us. But in the meanwhile, to manufacture something, if you have taken some land or some area on rent to install the plant and machinery, that particular rent is an expense for you. And also to manufacture something, you have to purchase some goods, right? You have to store that goods. So there will be a risk that the goods will be damaged. To protect that risk, if you suppose that you have taken an insurance policy, and for that you have to pay the premium. So that insurance premium is also a cost for you, is an expense for you, because it enables you to earn revenue. Okay. And like let's take an example for me, like I am giving that coaching classes, I'm giving the tuitions here. So to facilitate these stuff for me, I have to incur something, like I have to take a space where I can records or provide the classes. So that rent that I have to pay is an expense for me. All right. And major category of the expense is electricity bill, freight charges, loading and unloading charges, any insurance premium, anything like petrol, communication charges, travel charges. So these are all covered under the expense only. Okay. Next is what is prepaid expense. So we have learned earlier that what is expense, like how we can differentiate between asset or expense. But under the expense also, like if you have incurred something, but it might be possible that either you have paid in advance or you have not paid yet, right? So under the expense we have a two type of expense from the balance sheet point of view. So as you know that like suppose if you have incurred something, if you have incurred any expense, that you have to debit in your P&L account, right? But if so, in the accounts also we have we have a double entry system. So if we are debiting something, we have to credit also. So if have incurred any expense, but that pertains to the that pertains to the full year, or like suppose we have paid the money in advance to the supplier, that comes under the prepaid expense, that we can term as a prepaid expense. So it is a very simple terminology, that anything that we have paid in advance, or any prepayment that we have done towards any insurance premium, any commission, any rent. Suppose right now we are in March and we have paid the rent for the April, right? So that is a prepaid expense, because we have paid the rent for the April, and we have not, and April has not yet started, so we cannot recognize the expense in our books. So what is the accounting entry that we have to pay? Prepaid expense to bank account. So we are recording the asset at a one side in the balance sheet, and we are reducing the cash balance because we are already paid to the supplier. In the similar manner, suppose a businessman take an insurance policy for the 1 year in March. So that policy he took, it's valid till next year, March 2027, right? So they have paid the premium in advance for the next 11 months. So that premium we will consider as a prepaid. Okay, understood? Next is outstanding expense. So there might be a possibility that we have not paid the expense. Like, always we are not enough good that we have paid the expense in advance only. So there will be a cases where we have incurred the expenses, we have taken the services, but we have not released the payment to the vendors. So that we called as a outstanding expense. That is our liability. As like, as you, if you are able to recall, in the liability section we have discussed that anything that we have used, or anything that pertains to someone else, and for that we are under obligation that we have to repay, it is our liability. So outstanding expenses is our liability, like uh, any outstanding rent, any outstanding premium, commission charges. So anything can come under the outstanding expense if we have taken the services, and but we have not released the payment. Suppose electricity bill. We have received the electricity bill for the March, and the due date is March 2026, right? But uh, we have not released that charges or the payment to our electricity bill in April also. So it will be treated as a outstanding expense. The electricity bill we have to consider as a outstanding expense, and it should come under our liability in the balance sheet. And the second, let's take another example. Suppose uh, there are some workers who are working in your factory, and you have to you know release their wages for the Feb month, but in March also have not released yet. So that is also a liability for you as a outstanding expense, and as a wages payable. And then also, like, it is as a similar salary people also, it's similar kind of this stuff also, like like in almost all the organizations will get the salary in the next month only. So for that particular month, the salary will also become a salary payable, right? Next is, what is cash balance? So hope you are able to understand that the cash is a asset. Like, as we discussed in the asset section, the examples of the asset, like plant and machinery, debtors, cash, prepaid expense. So cash is the, it is an asset for us. Whatever the amount we have, or any amount that we held with the bank, it is our cash balance. So suppose if you are running any business, and earlier you have 50,000 to start the business, or you have started the business with 50,000, and as on date you just have 10,000 with you. So 10,000 is a cash balance. It means out of the 50,000 you have already spent 40,000. So you can spend either on asset or either on expenses. It depends upon the case to case. Okay. Next is loan. What is loan? So any money that you have borrowed either from bank or financial institution, or from your relatives or your friends, that you have to repay to them with interest after a certain period of time, that amount is a loan because it is a liability for us that we have to repay. Suppose if you want to start a business and you don't have enough money, so either you will approach to the bank or to your parents or relative to, you know, so that they can give you money so that you can start, right? So whatever the amount you will borrow from them, it is considered as a loan, and the loan comes under the liability, right? So earlier we have discussed about the broader category, like what is asset, liability, what is revenue, what is expense. Further, we are discussing under the in-depth categories like what is prepaid expense, outstanding expense, what is cash balance, and what is loan. Next is depreciation. So, if so, under the business, we have a multiple types of the asset on which we have to charge the depreciation. There's a 10 type of asset on which we don't need to charge the depreciation, but like plant and machinery, for example, car, laptop, computers, or any other machinery item or other any other equipment like furniture. On these types of asset, we have to charge a depreciation only. Land is land So there are certain type of assets on which we don't need to charge depreciation, like land and building. Land and building is the only type of the asset on which we can say that is a type of asset whose value will always increase, not depreciate. Like, and another assets on which we don't need to charge the depreciation is a cash balance, debtor balance, any term deposit with the banks, or any prepaid expense. So only we have to charge the depreciation on the plant and machinery because their value will always decrease in a practical life. Suppose if you buy a car 10 years ago about 1 lakh, so so for that particular car, today's value will be less, right? So that's why we have to charge the depreciation, so that in the books of accounts, the value will we can record the true value or the fair value of that particular assets. Like suppose you have 5 years ago, if you have purchased any machinery of 10 lakhs, and you continuously used that machinery to produce some goods, right? So after 5 years or 10 years, that machinery will not be able to provide the same, same efficiency to us. So that's why we have to depreciate. And under the as per the company law or under the accounting, we have multiple types of the depreciation methods, like return on value method, straight lining value method, that we can discuss later on. But as of now, you have to learn. First of all, you should understand on which type of the asset we have to charge depreciation. Only on those assets whose value will be decreased, only plant and machinery, in which car, laptop, equipments, any furniture that whose value will be decreased, right? Next is what is inventory. So whatever you have, if you have purchased raw material or work in raw material, or if you have some goods internally that you have produced, the purpose is just is very simple, to sell further, or if you want to use in the production, that is your inventory. Suppose if we purchase if we purchase the raw material from the external vendor too, so that we can produce the finished goods, that raw material is the inventory, because our purpose is to use for the production. In the similar manner, if we have semi finished goods, the on semi-finished goods we have to work more so that we can convert them into the finished goods. So that is a work in progress. So that is also an inventory, because our purpose is to sell further, right? What is data? So data is also a asset for us. So in some time, you will you have to make a sale on the credit basis. You have to allow to the customer to repay to you need to allow them the credit period also. So whenever you have the right to receive the money on on the basis of the sale, that person is your debtor, like debtor or trade receivable or account receivable. So these all are the terminology has the same meaning. Suppose if you sold the goods of 10,000 rupees to someone, to the customer, on the credit basis, so that customer is your debtor, because you have the right to receive the money from them towards your sale. In the similar manner, like creditor, if you have purchased something to from the external vendor and they have allowed some credit period to them, so it is your liability to pay them, right? So how do you account under the liability? How do you call them as a, like, what other terminology that you have? Because under, you cannot say, because there are a lot of liabilities, you have to further bifurcate to understand how, which type of liability it is, because loan is also a liability, outstanding expense is also a liability. So that is a sundry creditors, because we have purchased some goods or semi-finished goods from them so that we can use further. So wherever we have to pay something, it's our liability. Suppose if you purchase some goods and on the credit basis from the external vendors, so that is our creditor. So what is the difference between outstanding expense and the creditor? Because both are the liability for us, but under the outstanding expense, if you have pay something towards expense, that is outstanding expense. But if you have if you have to release the money towards your purchases, then it's your creditor. It's a basic difference. If you have to release the payment towards expenses, then it considered as a outstanding expense. But if you have to release the payment towards your purchases, then it's become your creditors, right? So more or less we have discussed about the broader categories today. So these all are the case studies I want you first to try, and in the next class we can discuss about the solutions of all these case studies. So all the best. Please keep trying, and if you have any doubt, you can contact me